We live in a global village. What happens in one corner of the world impacts us all. This is especially true in the world of money and investing. Ever wonder why the price of your favorite coffee jumps up, or why a company's stock suddenly soars? Often, the answer lies in global trade. Trade is simply the buying and selling of goods and services between countries. It's the lifeblood of the global economy, and it directly impacts your investments. Understanding how trade policies work can give you an edge in making smart investment decisions. Think of it like this. Your portfolio is a ship sailing on the sea of global trade. By understanding the winds of tariffs, the currents of agreements, and the charts that guide your course, you can navigate towards financial success. Let's break down some key terms. First up, tariffs. These are basically taxes on imported goods. Governments use tariffs to protect domestic industries or to punish other countries. Next, we have trade agreements. These are deals between countries to reduce trade barriers like tariffs. Think of them as friendship bracelets for countries who want to do business together. Now, how do these impact your investments? Imagine you own stock in a company that makes cars. If the government slaps a tariff on imported steel, the car company's costs go up, potentially hurting their profits and your investment. On the other hand, a new trade agreement could open up new markets for the car company, boosting sales and potentially increasing the value of your stock. See, global trade matters. Global. Let's look at a real-world example. Remember when the US imposed tariffs on steel imports a while back? Companies like Tata Steel, a major Indian steel producer, felt the heat. Why? Because a big chunk of their steel was exported to the US. The tariffs made their steel more expensive in the US market, hurting demand and ultimately impacting their stock price. This is a classic example of how tariffs can create winners and losers in the global market. Investors who understood the impact of these tariffs could have made informed decisions to protect their portfolios. Trade agreements can be powerful drivers of economic growth. Take the example of India's Reliance Industries, a conglomerate with businesses spanning energy, petrochemicals, and telecom. When India signed trade agreements reducing barriers for these sectors, Reliance Industries was well positioned to benefit. These agreements opened up new markets for their products and services, leading to increased exports and a surge in their stock price. This is a prime example of how savvy investors can capitalize on the opportunities presented by favorable trade agreements. Remember, knowledge is power. By staying informed about global trade developments, you can make your money work smarter. Section 5. Charting the course. Reading the signals of trade. In this section, we will delve into the fascinating world of technical analysis, a crucial tool for traders and investors alike. Now let's talk technical analysis. This method is all about interpreting data from charts and indicators to make informed trading decisions. This involves studying charts and indicators to identify trends and patterns in stock prices. By recognizing these patterns, traders can predict future price movements and make strategic trades. While fundamental analysis focuses on a company's financial health, such as earnings, revenue, and growth potential, technical analysis is all about market sentiment and price movements. It's a way to gauge the emotions and behaviors of market participants. One popular technical indicator is the moving average, which smooths out price fluctuations to reveal trends. This helps traders see the bigger picture without getting distracted by short-term volatility. Which smooths out price fluctuations to reveal trends. Moving averages can be simple or exponential, each providing different insights into the market's direction. Another is the Relative Strength Index, or RSI, which measures the strength of price movements to identify overbought or oversold conditions. This can be a powerful tool for timing entries and exits, which measures the strength of price movements to identify overbought or oversold conditions. When the RSI is high, it may indicate that a stock is overbought and due for a correction. Let's consider Infosys, a global IT giant. By applying technical analysis, we can gain insights into its stock performance. Imagine their stock price is steadily rising, showing a clear upward trend over several months, accompanied by a rising moving average and a bullish RSI. These indicators together suggest that the stock is experiencing strong upward momentum. This could signal strong positive sentiment, indicating that investors are confident in the company's future prospects, potentially fueled by favorable trade wins in the tech sector. Positive news and developments in the industry can further boost investor confidence. By understanding these technical signals, traders can identify potential buying opportunities. Recognizing these patterns early can lead to profitable trades. Traders can identify potential buying opportunities and ride the wave of positive market momentum. Mastering technical analysis can be a game changer in the world of trading, providing a strategic edge in the market. Section 6. Beyond the balance sheet. The real story trade tells. This section dives deep into the intricate web of global trade and its profound impact on businesses and investments. Fundamental analysis is like looking under the hood of a car before you buy it. Just as a mechanic checks the engine, the mileage, and all the critical components to ensure the car's reliability, investors must scrutinize a company's financial health. You're checking the engine, the mileage, all the important stuff. This means looking at the company's earnings, debt levels, and cash flow, ensuring everything is in top shape. In investing, that means digging into a company's financial statements, understanding their revenue streams, and assessing their management team. It's about knowing how the company makes money, how efficiently it operates, and who is steering the ship. But here's where it gets interesting when we talk about global trade. Trade isn't just about goods moving from one place to another. It's about the interconnectedness of economies and how a change in one part of the world can ripple through to affect businesses everywhere. Let's say you're looking at ITC Limited, a multinational conglomerate based in India. This company is a prime example of how diverse operations can be, spanning multiple industries and markets. They're involved in everything from cigarettes to hotels. This diversification can be a strength, but it also means their supply chains and revenue streams are complex and spread across different sectors. You need to ask, where do they get their raw materials? Understanding the source of their inputs can reveal vulnerabilities or strengths in their supply chain. Where do they sell their products? Knowing their key markets can help you assess the risks and opportunities they face in different regions. If a big chunk of their business relies on exports to a country that just imposed trade restrictions, that's a red flag. Trade policies can change rapidly, and companies heavily dependent on certain markets can be significantly impacted. Their profits could take a hit. A sudden change in trade dynamics can lead to decreased sales, increased costs, and ultimately lower profitability. Global trade adds another layer to your fundamental analysis, helping you see the bigger picture and make smarter investment choices. By understanding the global context, you can better predict potential challenges and opportunities, making your investment strategy more robust and informed. Section 7. Putting it all together. A real-world trade tale. Let's bring it all together with a real-time example. Understanding the complexities of global trade can be challenging, but seeing it in action makes it clearer. Take HDFC Bank, a leading private sector bank in India. This institution has been a cornerstone of the Indian banking sector for years. They've been expanding their international presence aggressively. This expansion is part of their strategy to tap into new markets and diversify their revenue streams. Now, imagine there's news about a potential trade war brewing between two major economies. Such news can send shockwaves through the financial markets, affecting stocks worldwide. This is where you put on your investor hat and start analyzing. You need to understand how this news impacts your investments. You look at HDFC Bank's financial statements. These documents provide a wealth of information about the bank's financial health and performance. How much of their revenue comes from international operations? This is crucial because international revenue can be more volatile due to global events. What's their exposure to these two economies in potential turmoil? Understanding this helps gauge the risk level. Next, you check the technical indicators. These tools help you understand market trends and potential future movements. Is the stock price reacting negatively to the trade war news? A sharp decline could indicate investor panic or a reassessment of the bank's value. Are there signs of a downtrend? Consistent negative movements might suggest a longer-term issue. By combining both fundamental and technical analysis, you can make a more informed decision about whether to hold, buy, or sell your HDFC Bank shares. This dual approach provides a comprehensive view of the stock's potential. Remember, every investment decision comes with risks. No matter how much analysis you do, there's always an element of uncertainty. But by understanding the forces at play, including the impact of global trade, you can make smarter choices and weather any storm. Knowledge and preparation are your best tools in navigating the complex world of investments. Section 8. The bottom line. Trade matters. Be informed and invest. Smart. We've covered a lot of ground, but here's the takeaway. Global trade policies have a direct impact on your investments. Whether it's tariffs, trade agreements, or shifts in global supply chains, these factors can make or break your portfolio. The good news is that knowledge is power. By understanding the basics of trade, staying informed about current events, and using both fundamental and technical analysis, you can navigate the complexities of the market and make informed investment decisions. So, stay curious. Do your research, and remember, the world is your oyster. Invest wisely and watch your financial future grow.